Real estate investing is often seen as a reliable and profitable way to build wealth, but it's important to recognize that it's not without risks and dangers. While investing in real estate can be a smart move, it's not a universally great choice for everyone. First and foremost, real estate investing requires significant financial resources. You'll need to have a sizable amount of cash for a down payment, and you'll need to be prepared to make ongoing payments for maintenance, repairs, property taxes, insurance, and more. If you're not prepared for these expenses, real estate investing can quickly become a financial burden. Additionally, real estate markets can be unpredictable. Just because a property is valuable today doesn't mean it will be worth the same amount in the future. Economic shifts, changes in demographics, and other factors can all impact the value of real estate. If you're not prepared for these fluctuations, you could find yourself in a difficult financial situation. Another risk associated with real estate investing is the potential for tenant problems. While many tenants are responsible and reliable, there's always a risk of non-payment, property damage, and other issues. Dealing with these problems can be stressful, time-consuming, and expensive. Finally, real estate investing is not a passive investment. Unlike investing in stocks or mutual funds, owning property requires active management. You'll need to find tenants, collect rent, maintain the property, and more. If you're not prepared to take on this responsibility, real estate investing may not be the best choice for you. In conclusion, while real estate investing can be a smart financial move for some, it's not a guaranteed path to wealth. It requires significant financial resources, an ability to navigate unpredictable markets, and active management. If you're not prepared for these risks and dangers, you may be better off exploring other investment options.